Hey, good evening. How you doing? Map Investments here. I wanted to do a follow-up video on gold. Gold had a significant sell-off this week, so I wanted to talk about a couple strategies maybe you could place if you want to be active in the metal space with the gold product. Um, the main product in gold in the futures world would be slash GC, but it's a very big contract. Here's the option chain. Here's the futures. If you need how to pull this up, I have prior videos. I have a gold video that shows how to pull up the futures. Just click here, and then you just go to futures, and then you pull up futures. And you can link them here, red, red. Just pick here whatever color, pick here whatever matching color, and you just click on whatever you want, and it'll pop up here. It's the S&P 500, and this one's gold. So let's talk about gold. Um, so gold had 277,000 contracts traded on the Friday uh, after Thanksgiving. It was short and weak, and I pulled up the chart on a prior video. Gold is down more than $100 in 10 days. It was 1898 down to 1776. It hit on Friday, bounced back to 1790. So a couple things you could do in gold. The GC, the slash GC contract is a pretty big contract. If you click here on the ass, meaning that you want to buy it, this one contract will cost you $12,650 of buying power. It's a big contract. For every tick on this contract, for every move, which is called tick, is $10. So if you wanted to analyze this, if you, for example, so just to get an idea, you right click here on the order tab, right click here, you go to analyze, and it'll pull up the analyze tab. You go to risk profile, and it'll show you. Let me stretch this out here for you. So let's say you buy at 1792, and it goes up to 1802. You made $10 from you made $1,000, but it's a 12,000. It's a $12,650 product, so it's a lot of money. So it's not something for small accounts. I trade a lot of the micros. So the micros is the MGC slash MGC. Come over here. It's the same as the big one, but it's a tenth. So it's 10 of these equal one of the big ones, basically. Had 88,000 volume on these contracts. So like if you want to buy this one for it to go back up, you would click here, and you'll see the order tab pop up here, one contract, and you click confirm and send, and you see this one is 1265. So it's 10 divided by the big one, so it's 1/10 of the big one. So in this paper account, it would reduce 1265, 1265. So that's another way you could trade gold. Now you may say, hey Mark, hey Map, this is a lot of money. I can't afford this. I only got $100, $200, $500. You can still do trades. That's the beauty of derivatives. They allow you to get creative and do what's in your budget and in your portfolio size. So for this trade, you would go to the ETF, which is the GLD. So we can type in here GLD, and it pulls up the gold ETF. So the gold ETF here, let's put it up. This is the Tasty Work platform as well. I like having both of them. I like this one because it has better, what's the word I want to say, better better view, a better picture of what you're doing, in my opinion. So the beauty of this is that you with options you can develop so many strategies. I'm just going to do a basic strategy. If you want to learn different strategies, my recommendation is you can click here, and as you can see, these are all the different strategies they have. You have verticals, strangle, straddle, iron condor, butterflies, which the best way to do them based on Tastyworks research is broken wing butterflies, calendars. So what I would recommend is you can Google these in you or put these strategies in YouTube, and they have videos on them. I would always go to Tastywork and look at their videos. They have good videos explaining, you know, the specific strategy that you can apply. But I'm just going to do a basic one here, where you sell a put and buy one to cover you, to protect you, and to do a defined risk trade. It's what they call a defined risk trade. So, and this is a budget trade. This is a trade for somebody who maybe, so hey, Mep, I only have $100, $200, $300. So I'll just do I'll do a $250 or $200 trade so you can see what I'm talking about. So you want to aim for when you're doing this option strategy to get in this trade, because if you wanted to buy the GLD itself, the ETF, let's say you wanted to buy the ETF and you want to buy 100 shares, we're talking about a $16,780 transaction. Now, if you're on a margin account, the buying power would be affected by 50%. In this account, some is in others is different, but here they would deduct 8,391. So it's a lot of money. So I said, okay, well, Map, I only want to do 10 shares. So you do 10 shares. So you're doing 10 shares still, 1,600, $839 reduction of buying power. So I don't think this is an efficient use of capital. And when we're doing strategies here and when we're trading, the main thing you want to look at is efficient, using your capital as efficiently as possible and trying to get the best return on your capital. When dealing with options, in my opinion, the best strategies are the ones selling options. The IV rank here is 23.5. This basically is stating the volatility in the contracts and how much premium, how much you can sell them for. The higher, the better. The higher, the further you can get away from the price of the underlying in this case the ETF. But I'm sure it has a pretty high implied volatility. No, actually, it's 19. IV rank 24. So I'm going to show you a basic strategy. So basically, what you want to look at here is you want to basically aim for 40 to 45 days. 45 days would be typical. So let's go to 48 days. 48 days. Let me see something. Yeah, 48 days. This is the monthly January 15 option chain here. Sorry, my dog's barking. So basically, this is a trade right here. We're looking at a trade right here, but this trade's only right here shows you the probability of a profit is 51%, and this trade only takes basically $50 of buying power. So this is a trade that you could do with your $200 budget, let's say. But in this case, we want to get a better probability of profit, because this is 50-50. We want to look for something between 67 and above would be ideal. So what you want to do is you want to move the strikes down. So we're going to click on this strike button and go down. So now we're 54, 57, 61, 64, 67, and 70. 67 here, 70. So the goal here is you want to try and collect a third of the strike. So what is a third of the width? I'm sorry. So basically, if you got 162 or 161, we got $1 difference here. You want to pick up at least 33 cents. Here they're only paying 22 cents. So what you could do is try and be patient and put in an order here for 33 cents. I'm sorry. Let me go back here. Edit order. 33 cents. And have it work, and just click here, review and send, and it'll work your order at a 70 it was like 70% chance of a probability. So you're risking 70 to make, you're basically risking 70 to use round numbers to make $30 on one contract. But if you get, let's get a little bit closer, you could try and get 35 cents and be at a 67%, or maybe move in and do a 64% and do 35, 37. So you kind of, I'm just trying to give you an idea of how to put a trade together if you don't have that big amount of capital. Trust me, if you hit a lot of singles and doubles and doing a lot of trades like this on different underlines and different products, it adds up over time. So let's say maybe you wanted to drag down this strike. You just grab this here and bring it down to 162, 164, and you're collecting $62 here. Your max loss is 138, and your max profit $62. So that's basically a $200 trade right there. So it can be done. That's on the Tasty Works platform. This has a 65% probability of a profit. If you wanted to do it in the Thinkorswim platform, you will go over here and you go to the January link here, open it up. Let's put all the I have to put all the strikes here. I'm sorry. One second. All. Just go over here, click all, and it brings up all the numbers, all the strikes. So basically, all you do is come down here to let's copy the same one we're doing here, 164. So you're setting the all you do is right click here, and you're gonna go sell vertical, and you're gonna sell the 164. You're gonna change this to 162, and you're collecting 61 cents. Basically here, but I would try and maybe bump it up to 70 cents, and maybe as the underlying keeps dropping. In this case, gold was down $1.72, but that wasn't the low of the day. The low of the day was 166.78, so maybe you could have got filled at 70 cents. So basically, you would have been risking 130 to make 70, but you have 65. Well, actually, if you collect 70 here, yeah, you would have a 65% probability of profit. And it's also a trade that you can manage and defend if it were to go against you. And I'll do other videos on that. I just wanted to talk about gold because gold was moving this week and show you that you could use futures. And if you don't have enough capital to do futures, you can do small trades, $200 trades, etc. I hope you enjoyed the video. If you like it, please give it a thumbs up, share it, like it. I'm trying to grow the channel and have open dialogue with my subscribers, and I will be producing more videos to have more chats, because the trading can be lonely, and I like to help people and create market awareness and stay engaged with the market on a daily basis. Thank you and have a good night. Bye bye.